LiteFinance, the world of financial freedom.
Hello, it's Monday, November 14th. It's time to start the market forecast. And so during this week, we will get a continuation of inflation data releases from key economies, plus GDP numbers. So it will be an interesting week, especially after previous week data from the US, where we see that it is really possible that the trend on USD has reversed. But is it true? Let's discuss that today. But first, as usual, let's start with the macro calendar. So, today on Monday, nothing much happens except the release of the monthly OPEC report and very late, just before midnight, preliminary GDP data from Japan. On Tuesday, we will get a claimant count changed from the UK with average earnings. After that, preliminary GDP from Eurozone and inflation on producers' side from the US will be published. On Wednesday, we will get a CPI inflation from the UK, retail sales from the US, CPI inflation data from Canada, inflation report from UK, and crude oil inventories. So, Wednesday looks very busy. Thursday will bring us a final CPI data from the Eurozone and initial jobless claims from the US. Finally, Friday can potentially be a calmer day, where from key data we will receive only retail sales from the UK. So now, move on to fundamentals. The sharp rise in US stock indices and Euro-USD reminded the March 2020 rally. In the midst of pandemic, many wondered how this could happen during the deepest recession in the global economy. How can this happen now that the Fed hasn't done its job yet? Markets rise on expectations, just like 2.5 years ago. The trend reversed in the blink of an eye, and the Euro-USD downtrend was broken out by mid-November. Previously, investors feared that the Fed would push the US economy into a deep recession with the most aggressive monetary tightening in decades. However, after the release of the October inflation data, the situation changed radically. The slowdown in consumer prices from 8.2 to 7.7%, the lowest since January, and core inflation from 6.6 to 6.3 year-on-year proved that the central bank's work pays off. So what's next? ING experts claim that the peak of the US dollar has passed. However, it is too early to count on USD downtrend. MUFG analysts warn that there is a risk that the recent market movements are excessive, which will lead to a Euro-USD decline. The situation in November has a lot in common with the August, when, after the release of July inflation data with its falling growth rates, the S&P 500 soared by 2.1%, while the yield of treasuries fell. So subsequently, investors became convinced that the CPI slowdown was temporary and started buying greenback again. This time, the reduction in core prices by 0.4%, fewer supply chain issues, and lower commodities costs indicate that the peak of inflation has passed. So this allows CME derivatives to raise the chances of a 50 basis points federal fund rates hike in December from 50 to over 80%, which weakens the US dollar, since it is slightly a dovish sign, of course. So the Fed does not like the decline of the USD and treasury yields, as well as the S&P 500 growth, as these processes make financial conditions less tight. So in this regard, we can expect a hawkish attack by FOMC officials, which will force Euro-USD to leave the zone of 3-month highs. However, of course, the downtrend has reversed, and now traders need to change their strategy. So, in terms of trading plan, focus on short-term sales followed by medium-term purchases. And in this regard, enter long trades when the price rebounds from the supports at 1.027 and 1.022. And so, that would be all for this video. Thank you guys for watching, and goodbye.